This week in general has been rather messy. There's been a lot of headline risk tape bombs with regard to the S&P 500. There was Greece, which we all know about, and there was also China. These were the major drivers of the conversation this week, and that's what determined the price action for the most part. At least that's what the commentators will have you believe. I think there's a little bit more to it than that, and I'm going to discuss both in depth. So yes, there's three components that I look at when I look at price and the markets, and they are technicals, fundamentals, and macro. And macro, when I mostly speak about, I talk about the terms of lending and money conditions with regard to margin. But there's also a bit of a subcontext in that with regard to other countries and things that go on, since the world has become more and more correlated as technology, i.e. the internet, has brought everything together. So you had a really large move the last few weeks. It's sort of been starting. There had been about 120 or so % run up in China, and they've since had about a 30% or so correction. And I think that the market there had just gotten really parabolic, and it was in the hands of retail traders, very similar to what was happening there as to our markets, particularly the NASDAQ in the late 90s, early 2000s, as well as our markets in the late 1920s, particularly 1929. And they had a fairly equivalent pullback in their markets. So this week was sort of the end of it, when everyone hears about it, when the headlines are the blood has already been spilt, and now it's sort of flowing into the streets and the sewers. And I think that I shouldn't say that I think. I know that it was an opportunity here. A couple of days ago, 3 to be exact, I sold some FXI puts into sort of the vortex of the down move. People always are the most fearful and also the most greedy at the absolute extremes, and those are usually the points to fade. Now, China had been down. It was, think of a slope of a curve. If you look at something that's coming down like this, there's probably room to go, but once it's pointed like this straight down, that type of selling is capitulatory type of selling, particularly with high volume, and it also becomes unsustainable. So we had gotten to the 61.8 Fibonacci retracement, and believe it or not, that was sort of the day that I was getting ready to pull the trigger. And there was also some reference lows, but I actually waited for the next day because I wanted to just see it confirm. I was either going to, believe it or not, buy it low. I was going to buy it either way. It was either going to be lower or higher, and I got lucky to be lower, so I sold some puts into that. I'm looking for, I guess, a retest, maybe a smidge higher, and I'll just take those puts off. They've gotten really creamed. The IV has come in, and price has moved the opposite way. So if we're up on Monday or Tuesday with regard to that, I'll be taking it off. As far as Greece goes, I really am sort of scratching my head with what the heck they're doing over there. I mean, Cyprus was talking, the big deal last weekend was this referendum, and now the deal they proposed to the IMF and to the Troika, really, to the IMF, the European Commission, and the ECB, the European Central Bank, is basically the deal that they had rejected a few weeks ago. It's an old deal, and the terms actually are worse and more onerous than the ones that they had recently put forth. I think the realities of shut-off ATMs and people protesting in the street have maybe finally gotten to our ideologue socialist prime minister over there, Alexis Tsipras. And I have a bit of a theory. It's a bit of a conspiracy theory. I think they've been borrowing money from some unsavory people, sort of, and there might be some stuff that's going on behind the scenes with regards to threats, and maybe this guy just doesn't want to get him, his brains blown out. So we'll see. That's all kind of conspiracy stuff. I can't really quantify it, but I always like to give you guys a little bit of an in. It's sort of also been the whisper that's been going around in the on the street, so to speak. So Anyway, China bouncing. First, for our markets to kind of stabilize here, you need a few things to happen. One, you need the grease deal. Two, you need China to stop crashing. And three, you need to have some, I guess, certainty about the prospects for earnings going forward. One last thing. I see some hearts coming across the screen. If you guys like what I'm talking about, I should say guys and girls. I have a nice female following as well. Some of the best traders are women, actually, that I know. Please hit the screen, and it gives the hearts, and then I know you like what I'm talking about. If you don't like it, don't tap, and then I'll kind of transition and change my topics. Anyhow, let's keep going. So those are the things you need to see. We're coming into earnings season. I usually like to be sort of the second mouse that gets the cheese. The first one usually has the opportunity to make more money, so to speak, but they also have the opportunity to get their necks broken in the trap. So I like to wait and prey on the opportunity of earnings setups. Once in a while, if there's an extreme, particularly with Apple, and I was really getting excited that it was setting up this way, but we had this nice rally today, and it sort of, I guess, negated the setup. I usually like, and if you follow me, you know I use this term quite often. It's the shake and bake, and that means that you get the shake out with the down move and then bake for the up move when you actually get the numbers. It's sort of the fear before the pleasure. And Apple had a look below. This is sort of going to be a teaser for my Sunday video, I guess, because I can show you this more on the charts. But Apple had a bit of a look below range, meaning it got below the reference low of 121.63, broke into the old reference high, then 119.75, and stopped just short of the 200-day moving average before today rallying back to the backside of the downtrend, the old up channel. Now we're at the backside of it. But with all of the bullishness in Apple today, being up $3.21, it was still, believe it or not, an inside day, meaning it was contained within the range of the prior day's breakdown. Actually, the real breakdown was Thursday. That was when we looked below the channel, and then yesterday was, I guess, just the realization that we were going lower. So, into some reference areas. As of now, I would say you need to clear yesterday's breakdown for yesterday's high of day to prove that it wasn't a real breakdown. That high of day was 124.06. So if you can get above that 124.06, I would say there's probably a bit of an all clear back to the 50-day moving average, and that comes into play. Currently, it's up in the 127s, but I believe there'll be some resistance up around somewhere between 125 and 127. So there might not be that much more in this tank here, but you know, a couple of points is a couple of points in Apple. Pre-split, each point was $7, so hey, I'll take it. Let's see, what else do you guys want to talk about? Facebook. So Facebook has been holding up rather well. It pulled back a bit. It tested sort of the breakout. I was actually looking for a little bit more, believe it or not, and it hasn't quite gotten it yet. It's just been chopping, and I think that the story for Facebook is higher. The big concern for me with Facebook would be the foreign currency issue. If you start seeing the euro really getting jiggy, so to speak, if the dollar starts really rallying and the euro starts really tanking here, you may see some cautionary statements out of Facebook. But I believe that they are stealing market share from Google. I think that they've just launched their mobile payments, by the way. You can go on Facebook and transfer money to your friends. I think that's going to be a thing, sort of, so to speak, particularly in other parts of the world once they get that going in terms of their WhatsApp integration. And I also believe they have accelerated revenue growth. So I'm a fan of Facebook. You know, I'm still a buy the dip fan. If you get some type of a move down ahead of earnings, that would be better. If it rallies into the number, then it gets a little bit more iffy, at least short term. It's always an order of operations issue for me with which sort of comes first. It's always a chicken and egg situation there. So that's Facebook. We did Apple. Let's talk about crude oil for a minute. because that's going to segue me into the Fed here. So oil had bottomed. I had said it would bottom in the lower 40s, and it did. And I've been looking for it to rally back up, believe it or not, even to 67.34 and potentially to 75. That's still, believe it or not, on the table. The issue for me here is twofold. It was starting to get poor highs. It had rallied back up into the 62s and stalled out, and there was a sell-off here. And it got back down to close to the 61.8% Fibonacci move of the level of the move, which is around 50.11. So let's just roughly call it 50. We got into that area. For crude to go higher, it needs to be back above 54.24. It is not back above there yet. So the move higher is temporarily on hold, I would say, until you can clear that area safely. The risk, of course, is a retest into close to the lows, to the 42s. If $50 fails, there's really not going to be that much, I think. It's also a psychological level. So that $50 area is really key to hold. If we lose that, I'm going to start thinking that recession, and that's probably what people are going to start talking about. Janet Yellen today was talking about her seeing some positive economic signs. I think she's talking about headline unemployment, but as we all know, and I've been sort of pounding the table here, that the true unemployment rate with the labor participation, meaning the percentages of Americans actually working, is the lowest it's been in my lifetime. It's since 1978. This is the lowest it's ever been. So that's not good. GDP is stall speed. We had a negative first quarter. If we have a negative second quarter, we're technically in recession. And the durable goods orders had been being held up by airplane orders, but those have been slowing. So everything is sort of signaling not good in the economy. So I don't really know what she was talking about. She did make a statement, and I think, as usual, I'm the only one who catches these little nuances. I had posted it, and it was, I just want to read it. Yellen said she wants to see inflation move up over a number of years. Holy cow. That would mean that interest rates might not be raised for years. Not, September or December, meaning years. So I have to do a little bit more work on that. I need to go back and actually listen to her statement again to see if I heard that correctly, because if I did, that's going to be a big thesis changer here. Although everyone here knows I've been a lower for longer advocate for a while with my little hashtag lower for longer. I'm actually thinking about making lower for longer t-shirts. Start wearing those out on the beach in the Hamptons. But I believe that as long as crude oil is coming down, and I haven't seen anyone mention this, but also more importantly, copper. Copper has I believe that the weakness in copper has been sort of exacerbated, I should say, by the weakness in China and even the thinking that there's weakness in China. And that's, I believe, what also took down Apple and may have some have been weighing. I heard a lot of pundits today also talking, or the last few days, not today really, but saying that maybe the Chinese are going to stop buying iPhones because the stock market's going down. I was listening to one of the TV talking heads. I don't want to mention anyone by name, but they were talking today about maybe people would stop eating in Kentucky Fried Chicken because the stock market was going down. And it was just, this is pure ridiculousness, of course. But sometimes perception's reality with regard to the price of stocks. So I believe, tying it back up here, that as long as copper is going down in a downtrend, as long as oil is weak, there is no pressure on the Fed for raising rates, as well as GDP. GDP is going to be what's really important. The risk for the Fed of going too soon is that they will have to reverse policy and lose credibility. The IMF has now warned them twice. BFF Lagarde has told Yellen that they should hold off on raising interest rates. I saw a reporter mention it to Janet Yellen today, and she didn't want to go right out and say it. But I believe that that also the World Bank has now warned the Fed as well. You have Greece on the the verge of blowing up, although I do seem to think that a Greek deal, like I said, is going to get done. So I would think that you may see a spike in interest rates early next week, particularly Monday. And if that happens and TLT gets the smackdown, it's already down 5 straight bucks, I think that will be viable for a bounce. And I have to take a look on the charts. I'll detail this a little bit more in my weekend review, but I'm thinking between 111 and like 113-ish area should be viable. The 113s are a 1.618 Fibonacci extension on the downside of the last range. The 111s, 112 area there had been a lot of muscle memory in that area. If that fails, by the way, we're going to see the 107s, 108s. But I don't believe that. I don't really understand why why we would have super duper, a spike in rates here. Janet Yellen has made it very clear that the trajectory of interest rates, while it might normally be here, is going to be like this. So their end target, sort of the goal that they want to reach, is going to be lower. In the past, the Fed has raised with policy overshoots to 6%. I believe that they aren't going to. I would say 4% would be the max. I think it's going to be 3% total for a while. And I don't believe it's going to be super duper fast. So that is also part of my lower for longer thesis, but I am not in the camp thinking that there are going to be interest rates raised in September or December. September would be the only meeting I think they could feasibly do it, because it's the one with the press conference. And then what is she going to be, the Grinch who stole Christmas in December? It just doesn't seem likely to me. It's kind of crazy to hear these talking heads discuss the Fed and the interest rates, because they'll on one hand say that they're looking for this great rotation out of bonds into stocks, and then on the other hand are saying that they're looking for they're looking for interest rates to that higher interest rates are going to be bad for the stock market. So you can't have both. A great rotation out of bonds means interest rates go higher, which is bad for stocks. I don't care what anybody says. Companies are valued on what's known as a discounted cash flow model, and not really to get too much into the math of it, but if you took earnings up here and you divide them by a number down here, if this number is higher, the total number is lower. If this number is lower, the total number is higher. So you want the denominator here to be lower for higher stock prices. So if there is an increase in interest rates, it's not going to be that rosy for the market. If it's a little bit, it's okay. If it's a lot, it's no good. So that covers that. Let's get into some of this other stuff here. Chipotle was one that you guys had mentioned. That's one I had followed for a while. I haven't been as into it lately. I think that it's been getting a bit jiggy. It has the lows are a little bit poor in here. It's been getting a bit jiggy in front of their number, and I think it's also been going up on the fact that oil is down. So when gas prices and oil comes down, that's good for restaurant stocks, and Chipotle would be sort of like the ultimate Momo levered play for that. So I think that is sort of what I'm thinking with regard to Chipotle. If they have a bit of a big downdraft, I mean, the stock is, here's your issue with Chipotle. It's been making lower highs and lower lows, and we all know that that's not the good pattern that you want to see. For the first time here, you're starting to see that turn a little bit. Longer term, I am bullish on Chipotle. I just don't know that I would be chasing it here in front of the print. I would rather buy Chipotle on after a couple of days of a strong decline. Once in a while, Chipotle gets these like $100 down moves, and those usually tend to last for a little bit longer. And like after you finally get the last of the washout, it winds up being a buying opportunity to get long, and also to sell some jacked up out of the money put premium into. Chipotle did break the up channel. We are kind of rallying. We're not back to the back side of it yet, which I, believe it or not, would think would be an opportunity for a right or right out short that would sort of be close to where it had gapped down to. But I'm going to wait on Chipotle till the end until after earnings. I might do a play ahead of it if there is an extreme move, like if it rallies up too strong into it, or if it winds up breaking down back into it. So I would say though that if you are long Chipotle, you got as close as I think you were going to get. I was sort of looking for this 589.33 gap fill. We didn't fully get it. We rallied ahead of there. Again, this is what I've been saying about these momentum stocks for the last year or so. They have a harder time sustaining these rallies because they don't launch properly. They launch ahead of their numbers where they're supposed to hit. Like if you're supposed to hit a 61.8 Fibonacci retracement and you stop a couple of bucks ahead of it, it goes back up, and then if you come back down to it, is it a buy that time? You know, it might not be. So I would have liked to have seen the clocks get a little bit more cleaned in Chipotle to get out some of the later chasers. Longer term, I think higher. Shorter term, it's a little bit more iffy. Speaking of one of these momentum stocks, Netflix. We all know Carl Icahn got out of that, and the stock has been coming down. It's also been using up some of the momentum. It's a bit of a weird setup here. You have the stock split, and then I think the day after is earnings. So I'm guessing that the play is probably long into the split, and then maybe take some profits ahead of earnings, because the stock has been up. I mean, you got to really kind of thread the needle there a little bit. I would say that. I think they're starting to get a little bit more. I think they're getting a little bit more competition in there. I mean, I still think that Netflix is the predominant stock, but after the split, sort of the reason to be long is a little bit less. I would be very interested in buying this stock post-split on a pullback. So let's go by that playbook for the time being. So that is my thinking with Netflix here. Did Chipotle? Let's reverberate back for a second into the volatility index. That was one that you guys had mentioned you wanted to have me discuss. So the VIX up until recently had been making lower highs and lower lows, and it's starting to sort of transition into a period of more volatility. I would say that if you want to write this down, this is sort of my thinking on volatility. On a normal pullback, 20 is about normal. 20 to 22 is about normal volatility. Between 22 and 25 is high implied volatility. That's sort of like where the end of a correction would happen. Anything above 25 starts having me think crash scenario. There was a large spike in volatility up to 31 back sort of like in, I think this was October, November, but that didn't hold very long, and it came back down very quickly. That was, I believe, on some news. I don't remember exactly what that was. If anyone knows, they can just type it into the chat here. That would be very helpful. But I am starting to see some things in the VIX. Oh, Ebola, correct. There we go. Thank you so much. Yeah, the big spike, that was an Ebola fear, very emotional move. So I see that the 25, I think, would be sort of the max on IV, and I'm sort of hoping for a spike up into there, believe it or not, to sell some premium into, which will which will segue us into SPY in a second. But I want to discuss the implications here of the VIX. You'll know the VIX is sort of still bid, meaning that there's fear in the market, if it holds above its 200-day moving average. That had been unsustainable for a while. It has now been support. So you really need to see for the market to kind of confirm it wants to go higher, for it to lose this 1539, which was the last hold of the 200-day moving average. I will say today's price action in the VIX was very encouraging. You had two very strong bars the last couple of days that made higher highs and closed up near the tops. Today you closed below the body of all three. Was it all three? You closed below the body of, let's see, the last 2 days and well into the body of the prior day. So I would have liked to have seen a little bit lower. I would have said if you could have closed the VIX below 16s, you would have probably had a little bit more meat on the bone there. It still could rally back up, but I would say that the IV crush today was really rather impressive. With regard to SPY, where do I see the market going? So I tweeted out today, we are, by the way, getting very late in the game with regard to stochastics, which is the momentum index, which measures the sort of the wherewithal, where we are in terms of the cycle. Someone asked me about cycles. I use stochastics for the cycles. The that time count that you use and then change it if something happens. I'm not a big fan of that. I do look at time. I do look at previous behavior, but I don't go so far as to draw those cycle brackets. I don't really think that that works at all, actually. I do believe in the cycle in terms of the stochastics, and we are getting to the more dangerous part of it, believe it or not. Which means it's sort of late in the game, so there could be some really big price action with regard to the downside. That doesn't have to happen. The SPY this week, I had talked in the weekend review video, I said that I was going to be targeting the 203.94, which was the 61.8 Fibonacci retracement. The low was 204.11, so we got pretty close, and this, mind you, was when we were still much higher, when people were like sort of wondering what was going to happen. So we did get there, we held, we bounced. The last 3 days have had higher low. Let's see, 1, 2, 3 days have had higher lows than the spike low, which should be considered a secure low now if we can take the 208.27. That would start bending the pattern back higher. I think that the rallies today was impressive and what have you. It was a lot of short covering, I believe. I think a lot of people got caught sort of on the wrong side. Apple's price move today was a little bit surprising. Like I had said, I thought that we might see a little bit lower before higher. And I think that there was some short covering. I am fine if it happens on a gap. It could be a gap and go. And that to me would be something to play right or right out against. So for more upside sustainable action, we need to see us over the 208.28. And if that happens, I guess the play is the 50-day moving average, which is up around 210. That had been a lot of support before the breakdown. I would suspect it will be a lot of resistance. That is sort of my upside target, the 210s with regard to SPY. The down, and I'm going to talk about the open interest in this Sunday's video. Be sure to watch that. If you're not subscribed to my YouTube channel, it's Justin Pulitzer Trades. There's a link to it in my Twitter profile, which is at Justin Pulitzer. If you're not following me, be sure to follow me on there. I post all the links. The YouTube channel, by the way, I post the weekend video. And if you missed or came late to this video here, there will be a rebroadcast posted shortly, actually, probably tonight. So anyway, let's not get too sidetracked. The downside move that I see being, if we don't get a grease deal or if China blows up again or there's something that happens, is the channel low of the move we've been in. And that currently, if it was to open on Monday, is close to 2,000. It's like in the 99s to 2,000 area. I believe that that would be, particularly if it happens on a gap, like if it's right to it, that would be a really big gap, though. I really don't know if that's going to happen. That will be an absolute screaming buy for size, for right or right out, the row trades that you hear me talk about. I think that will have taken out the bottoms of a ton of stops, and that would set up as an absolute great buy. The way I will do it will probably be to sell some out of the money puts. I would imagine IV would be through the roof at that point. We know we have the reference low of the channel there. We also know we have the reference low of the entire range there at 97.86. I would be looking to sell the puts below that 97.86, something maybe in the mid-90s, anywhere down there. If you can get that on some IV spikes, that's what I would be doing. If this happens regular trading hours, if you lose the 204.11 low, I think you can play it short, and you could play it short to the 201.90, which is a gap fill. It's also an old reference high. The play I have on for next week, and I don't love to get into discussing these too much, but the one I have on is the long 205, short 2 times the 201 half puts. Notice the levels I discussed. The break even on that is close to 198. That's right at the range low. So and this is only 7 DTE. I like to do these particularly when IV pops, and this week we had the IV pop. We got nice into the 20s, so I got a nice wide spread there. Usually I look for 3 points. This was this was pretty close. It was close enough, so to speak. It was a little over, actually. So that to me is the way to play it. Like I said, I would be looking for on a down move in the ES on the SPY. That's where I'd be looking to buy. If we get the up move, so to speak, look to buy over that 208.27, and also be looking for that TLT. I will be looking to play that with regard to the long side on some type of a spike cascade move down to take out the stops. Alibaba, that and Baidu have been very weak because they're Chinese stocks, they're Chinese proxy stocks. One of the things that got me to buy sell the puts in the FXI was the fact that when we had that gap down to a fresh new low, Alibaba did not make a new low. It actually held, and it had a close enough for government work tweezer bottom with by a 1 penny tick high. We got back down. We had a sort of a look below and fail with a big reversal hammer. The next day, big gap down, could not take out that low with the FXI, and then reverse to the upside. The selling in the reversals has been, the stock has been weak, but I do believe at some point that this could rally back up maybe to 85, maybe even 90, particularly on a good earnings number. I've been saying for a while, and it hasn't, it worked, and then it kind of worked, it was half-baked, so to speak. I said I thought we would get back up into the 98s, into the hundreds. We got into the 95s. Since then, we all know it's been an absolute cascade in selling in prices. So there is that lockup that's coming. The stock is so bombed out in the stochastics. I'm looking at this. I think the way you got to play it, I know it's tough. It's got to be from the long side here against those tweezer lows, the 76.21. I would say you got to be long, in my opinion. I know it's a little bit of a ways away, but I would say that the play is long versus those lows. If those lows break, you just GTFO, which means get the F out, and you could even reverse and play it short. And the IPO pre-secondary market, which is where institutions were able to buy it, was 68. I think you can play it down to there if you lose that level. I'm not thinking that happens. But if it does, that's the way to play it. That's the way I'm playing it. Twitter. Ugh, just ugly, right? This thing is just the personification of ugly mess. So the earnings is coming up, and I see this as a binary trade. If it's not, I'll be really, really surprised. I see that the risk in Twitter, it's either going to be a $29 stock or a $45 stock. That's the way. It's not staying here, in my opinion. I think it's going either back down to retest the all-time low at 29, or we're going up to 45. And whichever one it's going to do, it's a coin flip here. This is a complete coin toss. I tend to think that their quarter is going to suck, right? We know that their MAUs have been down. They just changed their CEO. They're looking for a new CEO. There's been a lot of speculation about this getting a takeover bid from Google or someone. It's very hard to play stocks like this, and the people who were playing Yelp learned this the hard way, to play for upside and a takeover when the fundamentals of the business are deteriorating. Yes, you could get very lucky, but it's hard to do that. The fundamentals in Twitter, I think they're not so strong. I do believe longer term somehow they'll figure out how to get this business right, and the stock will go higher. But in the meantime, that's how I see it. It's a coin toss which way that's going to go. It's sold off a real lot. I would say the bloom is off the rose on that one. I'll probably play it. You know what? I don't know how I'm going to play it yet. We still have a few days to the number. If there's some type of a false breakdown, the shake and bake, I will play it long. I have a little bit of a long in Twitter here. It's not going to get much more slack, but and I will probably play it hedged into the print. But yeah, I've been playing Twitter a little bit long. It's been disappointing. No size in there at all, though. Really small. So I think we could end it there. It's the weekend, right? We want to go and have a couple of drinks or take a nap in some cases. So be sure to follow me on Twitter. The handle on my handle on Twitter is @JustinPulitzer. My YouTube channel is Justin Pulitzer Trades, and be sure to watch. I'm going to have my Sunday video. I'm going to discuss a lot more of these setups when I can show you the visuals in the charts. It's always a challenge for me to show it to you properly and just discuss it, but that's really the way I'm seeing it. So let's have a good weekend, and cheers.